Whenever you call it and ask about a company that I don't know, you know what I do. I promise to do some homework and then come back to you with a real answer. Nothing cuffed on this show. Now that back-to-school season is right around the corner, it's time to catch up on our summer reading. Back on August 12th, a long time ago now, Gary in Texas wanted to know about Harrow, Inc. It's another Nashville-based healthcare company that, like HCA, except Harrow's in the pharmaceutical business, specifically eye care. Originally known as Imprimis Pharmaceuticals, this company got its start working with compounding pharmacy suppliers to identify unmet needs. This is all as generic as it gets. They had some success with an eye care product, then decided to focus on actually developing drugs for the industry. These days, Harrow has a comprehensive portfolio of products used in eye surgery procedures, like cataract removal, along with exposure to dry eye disease, glaucoma, allergies, and infections. In particular, they're focused on eye surgery and dry eye disease. This is actually pretty interesting because the eye is such a complicated organ. Eye surgeons might need all sorts of drugs for a procedure, whether we're talking about dilating your pupils or anesthesia or preventing inflammation. As for dry eye disease, this is something that affects an amazing 39 million people in the United States, and roughly half of those cases are of the moderate to severe variety. Harrow still owns its original business, compounding pharmacy space, and they've also got some investments in smaller drug companies focused on eye care. Now, this stock has had a spectacular run, up roughly 258% year to date. That's amazing. Now, many of that's because Harrow reported a stunning quarter earlier this month, which caused the stock to jump more than 50% in a single day. And you know what? It hasn't looked back since. What was so special about that quarter? All right, just listen to what CEO Mark Baum said in the press release. I'm going to quote. The second quarter of 2024 marked a financial and operational turning point for Harrow, with revenue surging 46% compared to the same quarter last year and 42% over the previous quarter, end quote. What's driving these impressive growth numbers? First, in May of last year, Harrow launched an anesthetic, something doctors use to numb the surface of the eye before surgery. Apparently, they can't get enough of it because orders for the anesthetic were up 98% just versus the previous quarter. Management also sees room for accelerated growth here after signing 10 additional supply agreements with strategic retina practice accounts in the quarter. They've signed 7 more supply deals just since the end of June, including a recent agreement with the largest and highest volume retina practice group in the country. Second, Harrow's got a drug called Triessence, which is both an inflammation treatment and also helps doctors see what's going on in your eye during certain key procedures. This thing's got a long history as the drug's been on the FDA's shortage list for the last 5 years, with no inventories available in America for the last 2 years. Last year, Harrow bought the rights to it from Novartis, and they've been working to relaunch it. While they still got to pass a few more tests, management expects a successful relaunch later this year. That could be gigantic. Maybe that's a big reason why it's up. Now, on the dry eye side of the portfolio, Harrow launched some eye drops at the beginning of the year, and they're selling like crazy. According to one of the pharmacy partners, total prescriptions in the second quarter were up an astounding 212% for the first quarter. Matt was adamant that users love these drops and they should keep growing rapidly. I don't know. Sure sounds like it. Put it all together, and Harrow's projecting its revenue in the second half will be dramatically higher than the first half, especially if they can successfully relaunch Triessence. Previously, CEO Mark Baum had been projecting greater than $180 million in sales for 2024. Now he says it's really a question of how much greater than $180 million that they'll do. I like this. After reaching what Harrow sees as a, quote, turning point, both financially and operationally, management believes they have the potential to reach annual revenues of $500 million by 2027. And after that latest quarter, I can't say this enthusiasm is unwarranted. So that's what sent Harrow's stock in the stratosphere. But is it still worth buying at these levels? Look, I'm always going to be wary of anything. Any stock that's up 250% in less than a year, that's parabolic. You know, I don't like that. While Harrow's sales speak for themselves, the company's still technically not profitable, even though the analysts that follow it believe Harrow will turn a profit next year. Plus, it's already EBITDA positive, which means we can make meaningful value comparisons with the other publicly traded eye care companies here. I'm thinking Bausch & Lomb, Alcon. Now, with management's focus on that goal of $500 million in revenue by 2027, I'm going to do something I shouldn't typically, well, no, I shouldn't say I shouldn't, but I typically do not do in the show. I'm actually going to use 2027 projections to try to value the stock. I don't like to use them because it's so far in advance, but we're going to try it here. According to the current analysis consensus, Harrow can generate $279 million in earnings for interest, taxes, depreciation, and amortization in 2027. Given that the company's current enterprise value stands at just over $1.5 billion. That means it's got an enterprise multiple of just 5.5 using the 2027 estimates. Remember, we're trying to come up with an apples to oranges comparison here. And that's the enterprise value, which is the sum of the company's market cap and net debt divided by the EBITDA. Now, it turns out on the 2027 numbers, Alcon has an enterprise multiple of 14, this is competitors, and Bausch & Lomb stands at 9. So your bull case for Harrow is that their 2027 projections are correct. And as those estimates become more convincing over the next couple of years, the stock's multiple should rise to get more in line where it is with the peers. I could argue, I can see this. Some investors could argue because Harrow's growth rate is expected to be so much higher than Alcon's or Bausch & Lomb's, it actually deserves to trade at a premium to those companies. Now, I wouldn't go that far, but because people are willing to pay up for more established companies. Plus, I'm still not sure how much we should trust that $500 million revenue target for 2027. If everything goes right, Harrow will be a big winner, but who knows if they can deliver. In the end, I'm not quite ready to give the stock a full-throated endorsement, especially considering its recent run and how little I knew about it when the caller first told me about it. While we know why people are excited for this one, and we know what Harrow needs to do to send its stock higher, I just don't know enough about the eye care space to endorse management's targets as gospel. I do know this is a fairly competitive space, and I can't tell if Harrow's products are differentiated enough to stave off the competition. That's why I'd love to have them on the show. Learn more. Open invitation. Bottom line, I'm always on the lookout for these sorts of undercovered stories, so I have to thank Gary, one of our smart viewers, of course, for putting Harrow on our radar. I keep following the company, all right? I promise. I'll go and look at the progress going forward. But for now, I'm just not ready to chase the stock based on some long-term assumptions that are more guess than estimate at this point. That said, I'd love for management to come on the show and prove me wrong. Bill in Massachusetts. Bill.
Hi, Jim. Thanks for taking my call.
Of course, Bill. How are you today?
Fantastic.
Good.
Jim, I just wanted to say one thing. You are an incredible teacher. I've learned so much through you and the club and Jeff and Regina. All you guys are just incredible.
Oh, thank you. I mean, we all worked hard, and the real pay that we get is that call, is what you just said. That's the pay that we get, okay? Because that's how I feel that this is worth doing, what you just said, Bill, and I really thank you.
Jim, I'm in my mid-60s, and so this money means so much to me. You just don't know. You have no idea.
Well,
I just wanted to be
great
here. When our club stocks came in, I went crazy. I bought NVIDIA, Meta, Eli Lilly, Vertiv Holdings, Disney, and Nextracker. And what I tried to figure out is how you buy stocks as they come in. I always bought stocks as they went up, and that was a big mistake.
Well, we do have philosophy, and look. I know that we've got a lot of questions to bring in, but you are talking about the fundament, and that's why I want to stop here and just say, thank you for this. I want people to understand we're trying to teach people how to check emotions, how to be clinical, how to understand why a stock could go higher. I was not taught this. I had to teach it myself, and now I'm determined to teach it to others, and I will teach it wherever I have to go. So thank you, Bill, and thank you from my team, our team, because that's what this is about. Let's go to work.
Yes, sir. I would like to I know before you were positive on Chubb, and I'm interested in picking up some. What do you think?
Okay, I feel okay. So this is I like to play with an open hand. I have been very torn because I felt if rates were cut, maybe Chubb couldn't make as much money, but they are by far the best, and I would not recommend any other insurer on the show other than Chubb. And thank you for the kind comments. It's been a very tough day, and you just made my day better. Fair enough. Thanks again to Gary in Texas for highlighting Harrow for us. I'm not ready to chase the stock yet. It's definitely one worth watching. I got much more Mad Money ahead, including my post-earnings exclusive with Snowflake. Then has Toll Brothers built a winning formula? I'm giving you my take on whether it's sitting on a strong foundation or a gold mine. Plus, all your calls rapid fire in tonight's edition of the Lightning Round, so stay with Cramer.